Hello, this is Rich Dad. Bitcoin has been moving within a large range for almost 6 months now, which is quite frustrating. However, it seems like this period of stagnation is finally coming to an end. The reason I say this is because I've noticed a significant development in the ongoing US presidential race that could be a major turning point. Additionally, I've come across some news about the oil-rich Middle East that could be the biggest positive development in the crypto market recently. I'll explain everything in detail in today's video, so let's get started. There are now 65 days left until the US presidential election. It seems like crypto investors have never been this interested in a US election before. It seems that this heightened interest is because Trump kicked off the US presidential race with remarks about Bitcoin, making it a central topic of discussion. Until now, no major US presidential candidate has made such strong statements about Bitcoin or cryptocurrencies so openly, which makes this election different from previous ones. According to Polymarket data, Trump is slightly ahead with 50% support compared to Harris's 49%. Harris was leading, but Trump has overtaken her once again. However, according to NPR's data, Harris is slightly ahead of Trump. NPR is a non-profit public radio network in the US, known for its neutral stance, so we can consider this data to be quite reliable. With the race being so close, it's really hard to predict who will win. But an interesting development has been observed recently. A crypto advocacy group called Stand with Crypto is planning to embark on a tour across key states, starting in Arizona next week. This nonprofit organization was founded in 2023 with the support of Coinbase, with the goal of advocating for the cryptocurrency industry and influencing regulatory policies. The group has recruited over 1 million members and aims to mobilize them to vote in support of candidates who are favorable to the growth of the crypto industry. In short, they're conducting their own campaign to ensure that votes go to those who will foster the development of the cryptocurrency sector. As I was reading, I couldn't help but think that Harris now needs to clearly define her stance on cryptocurrency policies. While 1 million people might not seem like a large number compared to the overall electorate, Stand with Crypto is targeting states like Arizona, Nevada, Michigan, Wisconsin, and Pennsylvania, key battleground states that could potentially decide the election. If Harris continues to be ambiguous about her position on crypto, Stand with Crypto could indeed become a significant factor in these states. To understand why this is the case, we first need to look at the US election system. Let's start with the 2016 presidential election. When Trump defeated Hillary Clinton, he actually lost in terms of the total popular vote. However, he still won the election. How was this possible? The US presidential election operates under a system called the Electoral College. In the US, citizens don't directly elect the president. Instead, they vote for electors who are allocated to each state. There are a total of 538 electors, and they are distributed among the states based on population. For example, California, with its large population, has 54 electors, while Wyoming, with its smaller population, has only 3 electors. To become president, a candidate must secure the support of at least 270 out of the 538 electors. This is the majority needed to win the election. Referring back to the NPR screen I showed earlier, you can see that Harris has 226 electors, while Trump has 219. In the middle, it says 270 to win, indicating the threshold needed for victory. You might wonder, why is there a difference when the map looks so red? This is because, as I mentioned earlier, the number of electors varies by state. So the visual representation on the map doesn't always match the electoral impact. That's why I believe the candidates' stances on Bitcoin and cryptocurrencies could be a crucial factor in this election. Harris in particular may need to come out with a stronger position. One way or another, I think this election could significantly ignite the crypto market. Lately, it seems like we've been focusing almost exclusively on the US. While it's true that the US plays a crucial role in the crypto market, that doesn't mean other regions aren't important. So I'd like to discuss another region that currently holds a significant position in the crypto market. That region is the Middle East. To understand this, we first need to look at the position the Middle East holds in the crypto market. The Middle East is the fastest growing cryptocurrency market in the world. Countries in the Middle East, such as the UAE and Bahrain, are establishing regulatory frameworks that support cryptocurrency and blockchain technology. A regulatory framework is a set of rules and guidelines created by governments or regulatory bodies to manage and oversee specific industries or activities. In simple terms, you can think of it as a rulebook that outlines what needs to be followed when engaging in certain activities. Through these innovative regulatory policies, Middle Eastern countries are attracting global cryptocurrency companies, and this movement is positioning the region as a crypto hub. In other words, the Middle East is creating an environment where cryptocurrency companies can thrive. Cities like Dubai, Abu Dhabi, and Bahrain are allowing cryptocurrency businesses to operate while simultaneously establishing regulations that protect investors and enhance market transparency. They are actively working to further grow the cryptocurrency industry. Perhaps due to these efforts, major global cryptocurrency exchanges like Binance, OKX, Bybit, and Kraken, along with many others, are based in the Middle East and are actively operating there. This is why the region is even being referred to as the Wall Street of crypto. As a result, the market has grown rapidly, reaching approximately $38.9 billion from July 2022 to June 2023. According to data from the Global Exchange Budget, there are around 500,000 daily active traders in the region. As you know, the Middle East has a young population that is highly interested in technology and has the disposable income to spend, which is driving this growth. This number is expected to continue increasing in the future. Tether announced plans to develop a dirham-pegged stablecoin in collaboration with Phoenix Group. The dirham is the official currency of the United Arab Emirates, and just like USDT is pegged one to the dollar, this stablecoin would be pegged one to the dirham. You might not be familiar with Phoenix Group, but it's a large cryptocurrency company based in Abu Dhabi and is now working with Tether to develop this stablecoin. Phoenix Group was founded in 2017 by Fard and Munaf Ali. It's a large corporation that operates 9 mining facilities across the US, Canada, the Commonwealth of Independent States, CIS, and the Middle East, with 23 subsidiary companies. And with its collaboration with the Abu Dhabi government, it holds significant influence over the cryptocurrency sector in the Middle East, comparable to the influence of Saudi Aramco in the region. So what happens if Tether teams up with the Middle Eastern Phoenix Group to create a dirham-pegged stablecoin? But what's really interesting is the timing. Just 2 months ago, there was an article stating that Saudi Arabia would end its 50-year petrodollar agreement with the United States. The petrodollar agreement was established in 1974. Under this agreement, Saudi Arabia would trade oil exclusively in US dollars, in exchange for military and economic support from the United States. With the end of this agreement, Saudi Arabia now has the opportunity to trade oil in various currencies, not just the dollar. And if a dirham-based stablecoin is created, it could even be possible to settle oil transactions using Bitcoin or other cryptocurrencies. This would open the door for that massive oil money to flow into the crypto market. Here are the sizes of the sovereign wealth funds in Middle Eastern countries. Saudi Arabia has $700 billion, and the United Arab Emirates has $800 billion. In total, these funds amount to $2.687 trillion. While not all of this money will enter the market, even a portion of it would create significant buying pressure on Bitcoin and other cryptocurrencies. If the personal funds of individuals living in these countries also flow into the market, the amount could be even more substantial. This could serve as a major catalyst for the rise of Bitcoin and the overall crypto market. Given these figures, the timing of Tether and Phoenix Group's announcement to develop a stablecoin doesn't seem coincidental. Personally, I see this as incredibly positive news. If you look at Bitcoin's historical weekly performance chart, you'll notice that Bitcoin often starts to pick up around the 39th week. This week is the 36th week, and there's a rate cut scheduled for the 39th week. Interestingly, the timeline lines up perfectly tilde. Also, in years when there was a halving, Bitcoin consistently showed positive returns after the 40th week. I hope this time too, Bitcoin ends its long consolidation and takes off. This chart compares the annual growth rates of Bitcoin and Nvidia to assess Bitcoin's future growth potential. Looking at Nvidia first, we can see that its early growth rate was gradual, but over time, it has maintained a steady and strong growth rate. Similarly, while Bitcoin's growth has slowed down over time, it has continued to exhibit strong growth at a level similar to Nvidia, indicating its potential as a mature, large-scale asset. By 2025, Bitcoin is expected to enter this growth range. Considering the historical pattern of Bitcoin experiencing even greater growth the year after a halving, there is strong anticipation that next year could see even bigger gains for Bitcoin. Here's a summary of today's discussion. The US presidential election is about 2 months away. With Trump and Harris neck and neck, we can look forward to the potential big rally that the Stand with Crypto initiative could trigger as a wildcard. With the end of the petrodollar agreement and the development of the dirham-based stablecoin, there is now a possibility for massive oil money to flow into the crypto market. This is just the beginning, and even larger sums are likely to enter the market in the future. Stay the course and enjoy the full benefits. Warren Buffett once said, "The stock market is designed to transfer money from the active to the patient." He also mentioned, "If you have average intelligence, you must learn to control your impatience." I too consider myself to have average intelligence, so I focus on practicing patience rather than anything else. To everyone watching this video, I hope you can set aside impatience, stay patient, and make great profits when the next bull market comes. Thank you.